Hi guys, once again this is Alfred from BinaryOptionsTutor.com. I'm here today with this ended up being like a end of day bet, and I thought I'd do this on the Cantor exchange. Um, Again, in this series we've been looking a lot at just VSA, volume spread analysis, and using the indicators that we have in our package specifically for uh, an intuitive volume spread analysis. And we got a little bit on here. This bet hopefully is going to inspire a winner. This is it's going to expire in a while. 1.190, 1.1190. We're talking. That's strike on the Euro USD. Counter. Uh, right now, this platform is designed by the guys that design the spot option platform, so it probably looks pretty familiar. Uh, this is your time. This line right here would be your strike. This line right here represents the real time pricing, and this would be the cost of a bet going up, and this would be the cost of a bet going down. There's not any action right there, but I got in. Uh, let's see, maybe about 20 minutes ago at 80 for this little bet. Now you can see I can walk away now with a little profit, but I'm only doing this bet for just to show you guys a live trade while it's going on. We're gonna leave this puppy cooking. There's about 5 minutes. You can see a run to our number. This happens. It seems to happen a lot when you trade 0 to 100 uh, style options here in the U.S. But we're going to talk a little bit about why we got into this and what we got going for ourselves here. Right here, this is great because the markets are open, everything is live. So let me pull this down so we can see a little more. Oops. Okay, here's the chart. This is a minute chart. Uh, you guys know these lines, and we're using the green arrow template. I'm going to talk about what drug me into this trade, where I got involved. 11.90. Because I paid 80 cents, you already know that I was in the money when I got involved. Over here, these are, well, I think I got in a little bit even before. Yeah, here's around where I got in. It's popping me back. Okay, here's around where I got in. Got a nice move here. You can see that little Bigfoot candle. You can see volume here is low. This is like the last hour in the U.S. session. Uh, so you could just see with these ticks, you can see these numbers here. The volume is just extraordinarily low. We're not even doing, uh, we're not going to do 100 on combined on each side. So I saw this I saw this pop here with a Bigfoot and volume. We're still in. everything here was low. So, but we were getting some healthy spikes. It's just due to the time of the day. That's why we're we're not really doing very much volume. Now, this is a bad example to show you guys because honestly, if you're seeing volume low like this, it's just going to be, in my opinion, more difficult to trade. Um, a lot, well, it may be easier for someone to knock you out of a trade. I got in here because of a pop. I got in here really because the volume was low, because I didn't think there was very much action to the upside, and I'm trading the the numbers from the green arrow, which that's always there, and I'm trading the Bigfoot, and I'm trading the spike, which I see. Okay, we've got a nice Bigfoot, we've got a nice spike in volume. The volume wasn't anything. Even now, you can see we're both sides. We're still not even doing 40, but that's good for the trade that we got in because I really didn't want to see a lot of volume to push the market further. And we just kind of meandered along, and you can see the last of this trade here, a minute and some change left. We're staying inside of that little tight channel. We we were able to pick out a spike for his back there, let's say 20 30 minutes ago. But when you can see that there's hardly any volume here, price action can tell you when there's a larger, well, that's kind of subjective due to scaling, but price action can give you the direction that a market's trading in at the time, but it can never tell you whether there's volume or there's not volume. And that's a bigger confirmation because it tells you that there's just not a lot of orders. If there's not hundreds of orders out there, or that type of action going on, the chances of the market moving up rapidly, it goes down. And that's really the main reason I was taking this trade. We can see just a little while left here on this trade, just seconds. Um, it was in the money when we got into this trade, and I would like to get it cheaper, but it's because of the liquidity here on the Cantor exchange now. You you've got to work with the pricing that's there, and really, again, this is really just something to show you guys. There's the trade. There's the expiration, and to introduce you to the exchange and show you guys uh, a live trade putting some of these ideas together. Now, this is trading in the day, around the end of the day, and when we get that spike, let me put my little vertical line here. There's our Bigfoot candle, there's our spike, and that was unusual volume and unusual price action. The Bigfoot let me know that the spread was up there. The volume let me know that, hey, this is pretty high volume for this time of day. And unless the volume would have continued, and which anything is possible in a trade, but that's what I was speculating on, not just the price action in and of itself, but speculating on the volume, and the spread that we already saw was very significant, and we just kind of meandered. You can see there's a place, these are places here where we did actually get past where the market actually was when I got in, but there just wasn't enough volume left in this hour to push us up and past that 90. And that's, in my opinion, a great part of the reason that this bet ended up a winner, and that's just using volume spread analysis, not so much just the idea of, okay, we're going to come and capture spikes, but that's kind of like using the reverse of it. Okay, we don't see a lot of orders here. Even if someone wanted to push a trade against you, there has to be someone there willing and believing in that trade. And also, there's another chart that I took a gander at, and that's this chart over here. These are Heikin-Ashi candles, and every one of these from the hour or 4 hour to the day, they were all saying down. These are the actual representation of the candles, and every one of these from the hour to the 4 hour to the day, they were all saying down. And we were around the end of the U.S. session, so my theory was, again, along with reading the volume, that the day had been decided is a down day, and I didn't see much of a reason or much volume for pushing the market up at the end of the day. So that's really the logic behind that trade. Again, it's not just using, it's using the indicators as tools to help you to make a good speculative trade. Hope this is giving you guys some ideas and help illustrate the power of volume spread analysis. And it is analysis. You're gonna have to, use the use your noggin, use the uh, intellect, and that's really what trading is about. It's a competitive field, and you're going to be out there competing in a zero sum game against other traders. Once again, this is Alfred for BinaryOptionsTutor.com. See you guys on the next video. Like, share, comment, subscribe. If we've helped you, please help us by sharing with others who might be interested uh, in learning to trade speculatively.